Good morning, everybody. Welcome back to another stream. Hopefully you guys are doing great. Let's start, like always, with yesterday's review. Pretty much went our way. We looked at this as a simple day, as just doing the opposite of what all of retail traders do, which is just follow the build up. And the build up, as we saw, was just an insane sort of collection of longs. As you can see, the sort of slow build up. We talked about sort of how this came in, nice little retest here, and then continued back up. Then a nice little double top, and back down. Then it's in the direction that we wanted. Then, as you can see, once we slammed that, the first move was high to get rid of shorts. We know that if the first move is high, because the shorts are at the market, then it means they're going down. So we know that somewhere in this bar we are correct in going short. It plays with them a bit in terms of coming in, and I think it's better looking at this on the tick level. So look at Bookmap. Here we go. As you can see, this is where we ended the open, where we have that long collection here. As you can see, we collected, then that was that dip down, then came the whipsaw. First move was high, that's first collection longs, then they went down for a bit, then they went up again, nice little double top within a bar, then into the direction continued. Small little stop, and we talked about how what's it called again, 230 potentially pivots it back, but it just pivoted it back in the sense that they just traded back into here to try to collect some more longs, but ultimately they didn't break that. So again, that was that potential here. You had that double bottom again. It was a very sort of shallow trade for like half hour, so there was a possibility you could have counter traded some whilst keeping your short open, and then closing some here, then stopping the rest out at break even, carry on your short, so on. But as you can see, there's after that it just sort of continued back down. Again, it seemed like a lot, but not really too much. It's just moved the weekly range in and out, and it came back just very shallow. Again, still had the nice directional move that we're looking for. Again, that was that 230 whipsaw that we talked about as a potential sort of divergent sort of point where it comes back and pushes out. But generally, in the essence that we saw that long builds up, it was nice and easy to say that was a short for today. I mean yesterday. And it comes back, takes a stop out, and now we're trading back into the underside of this. And again, once we sort of reach that, we could potentially look at that as resistance, and we want to see the build up again of traders, because I mean we didn't really get too much in terms of short, only about 3k yesterday, and we sort of balanced that out. Today we have nothing in terms of trading wise. We do have shorts stacking up, so it does make sense to try and at least take those out, but mostly sort of people comfortable in that long. Hey, what, no sound? So are you serious? The sound on my side? I don't know why there's no sound. Actually, is it actually? It's okay. My bad. I don't know. Yeah, I was gonna say the sound on my side. Got me worried, man. But as you can see, we're collecting longs, which is always nice to see. Here, you got your shorts there, dip down, so now we can further this into a higher push. Looking at the walls, you can see where we let it break through here, and then as soon as we started coming back up, this started showing its face here. So look at 28k to try and stop it for the most part. But in general, it's a nice little day yesterday. Should be a decent day today. Should be less sort of quiet, or if it's not that quiet, it should be particularly more. Good morning, no. God damn, man. I think that's a you problem. No sound. So you guys starting a new thing to irritate me? God damn it, man. I always check. I'm gullible, guys, please. Really, but yeah, actually, I have to actually double check this again. Okay, cool. It's okay. Oh yeah. It was me. That's the third time I've checked the sound now. No more. If anyone says no sound, I'm bad. What did we want to look at? It completely made me lose my train of thought. Yes. Okay, fair enough. I mean, yesterday was a nice little day. You can see that we just spiked high. That's all we did, and dropped low again. Similar sort of thing we did with Bitcoin. Everything did the same. It always seems to work where we're coming in, they let it go high, they let the shorts come in here, they're like, oh yes, it's gonna come back down, then they let the longs, they let them get punished here, they let the longs come in, it's like, oh no, FOMO, then they just destroy them. Like, it's, I don't know. Like, after like 2 times, shouldn't like you guys learn that, yeah, maybe let's not follow the crowd. Maybe let's not do that. But nope, they still do. I mean, you can see it came back into here, and it's a nice little double top, double bottom rather, coming into that support. So we could have some stretching. So the stretching could lead to Bitcoin going higher in price. Again, we're sort of looking at 2800 just about here. 50% of the weekly range is here, so we're looking at that and we're saying, okay, there's where your potential first point resistance is. There's where you're looking at as a resistance point, and from there, you can sort of say, okay, if it rejects, we go down. If it sort of breaks out, we go higher. Generally, the way it's moving, we're probably looking for it to reject at that point. And if you look at SPY, I mean, it's pretty much just gonna gap back up straight here, come back down for the most part. Look at some altcoins in terms of see where they are. They're a lot higher. They recovered a lot faster, but still stayed within sort of territory that we discussed, where it just took up a range, pulled down. I mean, it's already sort of printing that sort of area where you have that, point that down, could just easily sort of come back down here. But considering it's consolidating this long, we might just spike it one more time, then drop it. Who knows? It just all depends on Bitcoin which one we get. For the most part, it's everything's starting to still tend towards the bearish side, rather than have a nice little bullish shape, because everything just essentially had a nice little V-shaped recovery. And you can see that sort of push it. We can easily sort of push these down. If we go up high, we can easily push this down, essentially. So there's a nice little aside that we can look at this. That curve again, just coming back, same sort of resistance here, same sort of point there. You can see that. I mean, it's been pretty nice in terms of where you're looking at this area. Yeah, I mean, it's sort of missed that slightly, but again, just coming up to everything sort of had this nice little V shape, nice little point here where they're letting people go long, and the people who are scared and shorting here get punished. Oh, here punished, and then people get along. So they get punished on the downside, get a few downside, and pushed up. So we're looking at that, and we're just looking for a potential drop side down. Same thing with dot again, just another sort of V-shaped recovery. So everything's sort of like nice and sort of even on this sort of area, printing that sort of V-shaped recovery sort of point, and hopefully looking for that to sort of drop. Solano, again, exact same thing, but this time it's more in line with Bitcoin, where you're sort of hitting that into this sort of resistance territory here, sort of point there, and there, sort of you're nice and even there. Could easily sort of retest that, but again, could break it and go into this territory here. So it depends on where people come in. It's a nice little aside. Let's sort of look at sort of Ethereum. Nowhere near the monthly, but it came back down decent sort of amount. I mean, again, we talked about Ethereum coming down. It's nice and easy. Staying above the daily and monthlies, it's nice and healthy. We only traded towards this sort of 4 hours point here. Just took out the first level stop here. Didn't bother going down too far. Again, it's another sort of retracement where it's coming in, retracing to here. Again, could just easily come back down. And I think that's the sentiment for the entire sort of market is we're just going higher to go lower. We're just sort of getting people out. We're still trading within sort of reason of a downside move. It's still sort of overtly bearish. Again, still can classify this as sort of decently bearish. See if it can push itself further down. I mean, if it can't, then it starts bringing out in troubles where we're just inflating price for no reason. Again, we're looking for a deeper seated retrace as we sort of do a lot of repricing. Again, yes, they sort of fixed some of that. I mean, we're sort of keeping this down. I mean, we only have had a 25%. I'm not 25 basis point rate hike, so it's basically what we forecasted, which was nice. So that's why we didn't go down too much. We just undid sort of Monday, Tuesday. So we didn't really sort of get rid of too much liquidity because we just had the 25. We just had what we wanted rather than any sort of pausing, any sort of rate decline. Like Gilon suggested, that idiot. But other than that, I mean, it's sort of just moved back into sort of this area again. Now we can sort of try shift everything because we don't have any news. We don't have any sort of news coming in here that is too important that will affect anything of note. Any speakers coming in? Not really. So I mean, pretty much that nothing coming in today. Don't have too much tomorrow either. So again, should be a quiet end to a explosive Wednesday, but generally expecting it to continue trend essentially to the downside. As you can see, these long bids coming in just really haven't pushed it up too much. You have these sort of areas of short. We wait for these guys to come in high def. As you can see, these shorts pushing it out. Again, these shorts, once they come in, if they hold these areas, we push it out. Still have a short with no TP, feeling brave. Do you at least take some profit? If you have no TP, that's always scary. Actually, not really. At least you have a stop, though. TGM plays 0 to hero. Yeah, but we look at this sort of short area, we could have that potential rise here. If we hold that down again, we're looking at this area. That's where our 50% lies. When we get that 50%, we sort of maybe can go back and continue that downwards move that we expected out of everything. But it's just we understand this sort of slow grind upwards is just another collection of longs that are waiting to be liquidated. But in doing so, in going down, we've collected a bunch of shorts as well. So we know that if we haven't liquidated these, like we have liquidated these guys, it's just gonna be sort of counterintuitive to keep these guys on. Stop loss BE, yes. Okay, that's fine then. Either you get nothing or you get everything. Again, this is the area we look at resistance at. It's a nice little side. We can sort of create this sort of picture. That's image one. We can maybe do a shallower one, but generally, what consensus is sort of to the downside, essentially. Is there any point we're bullish? And that is the real question. I mean, we have a nice little daily imbalance here. If we come in, maybe we get a nice little retest here, push up. But generally, I don't think we can shake this, shake the pressure off of the larger sort of downside. Again, if we come in within the range, we're looking for a range high to be taken. Once the range high is taken, then like we did here, just drop back down. Again, high taken, drop back down. In this case, we got a triple top, but nevertheless, we came down. And I think that will be what we're looking for throughout sort of this area here. Let's hear some robots give us some news. Why not? Nice little 5 minutes of wasting. Ooh, peak inversion. So I can't be reading this. Let's read this here.
The Fed pivot is near, and yield curve inversion has likely peaked. That's usually bad news for stocks, this Fidelity strategist says. By Steve Goldstein.
It's Steve.
March 23rd, 2023, 7:48 a.m. Eastern Time. The Federal Reserve on Wednesday opted for a dovish hike over a hawkish pause, with the banking system still seemingly on fire, or as Elon Musk just tweeted, melting. But whether it was the right move or not, the central bank acknowledges it might be close to the end of the rate hike cycle, as it downgraded its views of further increases to some additional policy firming from ongoing increases in the target range.
Yeah, so they didn't go too high, but again, this little baby screaming, "Oh, melting! Oh no, too much! Oh no!" You know why? Because he has to pay so much back because of the rate hikes. It's like, "Oh no, you're increasing my loans." Oh no. This guy's dying. I just can't wait to see him go bankrupt in his life, in my lifetime. It'll be such sweet. But Okay, onto some, let's see, the end of the rate hike cycle. Yeah, good. That'll be really nice. Yeah. I mean, we're slowing down. I mean, we're reaching to the bullish sort of offset seasons. So we could look at that. I mean, as like change, we've sort of overcome our worst week, which is this week, and after this, it's just a slow sort of come in. So it's either a rate pause or a foot off the gas sort of thing approach.
And if the Fed is near the end of the rate hike cycle, it also follows that the days of peak inversion have probably come and gone. The market sure seems to think so. The gap between the 2-year and the 10-year yield reached as much as 1.08 percentage points on March 8th, but as of Wednesday stood at just 49 basis points after SVB Financial, Silvergate, and Signature Bank relocated to the big bank regulator in the sky. Deutsche Bank is now recommending a trade betting on the curve steepening for the first time in more than 3 years. More on that later. Jurrien Timmer, director of global macro at Fidelity Investments, looked at the intersection of yield curve inversions and the stock market. He acknowledges the signals are frustratingly disparate in terms of lead time and magnitude, but what typically happens is the market holds up for a bit, and then there are big drawdowns in the months that follow. He studied the 3-month versus 10-year inversion for his analysis. The worst performance was after the inversion in 2007, when the S&P 500 drawdown reached as much as 51%. Of course, that was after the global financial crisis. But other drawdowns were pretty steep too, including 40% after the 1973 inversion, oil crisis, and 39% after 2000 dot-com bust. Timmer posted another chart showing both 5-year cyclically adjusted price-to-earnings ratios and financial conditions indexes. Long-term capital management collapsed in 1998, the Fed pivoted, and the dot-com bubble swelled in size. I don't see a repeat of this outcome, since we already had a similar bubble, but it's an analog to keep in mind, he said. Be careful what you wish for when it comes to Fed pivots, he says. The markets. Stock futures were moving.
As this whole thing's interesting. Let's sort of look at these and see where they're going with this. So it's the yield curve. It's insoluble to read. Overlaid over. I mean, you can see them slowly inverting, but let's see. Color codes 98. I can't make heads or tail of that. So small. I have to like squint my eyes at it to make things. But let's see. In terms of this, they were just saying that. I mean, you're expecting potential rise coming out of it. So we're looking for bullish days, but not before some sort of drawdown. So I mean, we really did already have some drawdowns. I guess you could consider all of this here as just a nice little drawdown. Once we sort of were pricing in all of these sort of major collapses. But at the same time, we have collapse. We had Silvergate here, where everyone just rushed. I was like, buy Bitcoin, buy Bitcoin. They're like, okay, digital gold, let's buy that. But, I mean, we're still at this area here where we could easily just come back down and then just revisit this top here, just sort of nicely close out this book here. So this is what we're looking for ideally. Coming in for today is if we're sort of making a move towards that area there, could be a nice little retest. I mean, looking at SPY, we can see that we came into here, came back up. We're looking at that again resistance. It's already looking like it wants to open up here. So again, we want to see it try to continue its wave back down into sort of this. Try to create some drawdown and then slowly over the next few weeks taper that and show that we want to look a bit stronger and continue to that high end. And that's the thing we're looking for. We're just looking for a slow build up to then sort of reverse sort of our sort of trading decisions next week or so, which is essentially close to next month. But again, could be a nice little summer that a high we create ourselves again seasonally. Where we look better off in these sort of months than we don't. And this here is nice little kept here. We didn't really break this high, so we could easily continue back down into that trend. But as soon as we create that sort of area here, people trade this break here, so we could sort of wait for that break here. Then that becomes our sort of point where we sort of say that reverses into this sort of trend. But generally everything's still still in that bearish area here. It's just not what I'd say as an idyllic scenario to be in. A nice little, unless we're getting a double bottom somewhere along these lines here, we're not really looking to be in this area for a long side trade. And we've already talked about how the bids are sort of supporting that in terms of going short on this top here. So we're just waiting for them to clear those guys out, and we have those cascades of longs that will just re-enter into the market. Again, stopping around 28k is like our ideal scenario to stop at in terms of that underside retest here. Once we get that, again, once we get that long, we can sort of drop that down from there. And once we sort of drop that, then we can sort of continue on with our sort of on our merry way, essentially. The only sort of would be if we came in here and we could easily go up, and it would be a shallow trade again. We're going up to this area here, essentially you're trading towards that area. You can always avoid trading long to this area if you're not in a long from, let's say, from Asia. Because I would be highly advised into sort of trading that side and trading this high in general, just because you never know when they reverse it. But generally, if all altcoins are saying the same thing, and if everything's just saying, oh, okay, we're going up high, we're trapping out longs, we're just squeezing these shorts back into this pocket here, we could easily just reverse this back down. Essentially, it's a nice little break for people or for traders, and that respite will ultimately just punish them. I mean, we saw gold bounce on this area here, back up again, to be expected. As everything collapsed downwards, we saw gold sort of come back down and sort of hit into this area here. Now it's back up this area, so it's now, if this continues to drop back down, it might be better signs for stocks, which might end up going high side. But generally, I think more people will be coming into gold as they leave other assets from today. Again, this cause and effect, usually they're inversely related in terms of when people are trading, because gold's seen as a safe haven that people run to when they're scared of the stock market. Some teachings, some more today, feeling lucky. And that's the question, Punk. Do you feel lucky, Punk? That's the question. I mean, it is in a scenario where we're here, we're nice already printing that little short throw double top here. We could easily sort of drop this. Let's see where our Binance areas are. I mean, just coming back to that 50% between this area, you can see where it stops. I mean, this is where we wanted it to stop in the first place. Again, that's sort of halfway between that area and this area is here. Again, it's just where we're looking to stop at. We're looking at that as a nice little resistance. We can have some slight overhang where we come into this and just slightly here, but generally just collect volume at this area here. And once we see that volume, we can drop that further and have that nice little confirmation from Bookmap that, oh yeah, they are collecting longs here. You can see this here. You can see collection of longs here. You can see them just adding back into this area here. So we have that peace of mind to say, yeah, cool, that's going to come back down. And to be honest, like always, you're just looking for that 10 o'clock range setup, spike, and continue back down. Like it's never hard with how I trade. It's just you wait for certain things. If you don't get those things, you leave it well enough alone. So just wait for the range to set up. 10 o'clock comes in, you see if it spikes low. If it spikes low, we're going up into high. If it spikes high and doesn't look like it wants to trap and it looks like it wants to escape, you're going to trade that back down short. But to be realistic, I don't know how much we're going to get out of today, because generally I think shouldn't really move too far, because we've already sort of had a nice little crazy day yesterday, so everyone should be a little bit tired. We should have a nice little bowl to wrap up the week, but who knows if they just go for a crazy reach around and hit out into a lower sort of target. Could be a possibility. In terms of back to the news, let's see, what did he post? Fed pivot is near. That's not near. SP will be higher in 6 months, end of Q3. Yeah, I think yes. Yes. Risk off. Everyone's trying to go risk off of gold, oil. They're trying to come back into this. Fair enough. I mean, it makes sense after a low. Everything very that's good. I mean, as long as you allow yourself a bit of fun while trading. First Republic and Regent share. Oh no. Oh no. For correction. Okay, one says U-turn, one says correction. Okay. US stocks face a downside risk after the Federal Reserve went ahead with an interest rate hike Wednesday. Not went ahead. They needed to battle high inflation after bank failures earlier this month. I still think that something is probably going to keep breaking. Okay. The head of investment at SoFi. Do you know what? I think he's right. That's the thing. Look, if you draw a bridge and you draw like this is SVB, and you draw up a client list with them, you see who the clients are. It's tech startups. Those tech startups, and you see how much they're indebted to. It's about what 190 billion. There's about 190 billion here, tech startups. Okay, so if now they miss payroll, who does it affect? That affects all the employees. So your little employees here, like, oh no, I can't buy anything now. And however many of those employees, those tech startups started up, had, now they just have a risk of missing payroll, them either leaving or just going hungry, I'm hungry or whatnot. It's a massive sort of area of where I think 65,000, like some insane number of tech startups and general business started with SVB, because it was not a small bank, and the only reason it collapsed was, I think, gross negligence is the key word. Gross negligence is it's the only word to describe that whole scenario. So now we start moving to territory where we've got a lot of insolvencies, so a lot of people going back into sort of unemployment essentially, or non-farm, or going back into that, going back into sort of government sort of subsidies. So it puts pressure on the government if these guys are not sort of dealt with again. And I think the best thing to do is prosecute SVB or whatever. The reason being is because founders and the owners and the higher ups, they sold shares before the demise, and they probably would have done better in selling shares when what do you call it again? Jim Cramer said buy a couple of months ago, and that should have been the clear sign this bank was gonna collapse, because he said to buy this. Jim Cramer said we like at 380. This bloody idiot can never get anything right. But generally, you're looking at this and just like, oh crap. Okay, like where do we help people? The best way to help them is by prosecuting these and taking money from the people who took advantage of the scenario. Pretty much that. Because if the government comes in and says, "Oh, we inject money in," the government suffers, the economy suffers. If the government says we inject here, same thing here, and these guys get away scot-free. They should. I think they should. They are under federal investigation. If they're not, they should be, because either they get done for insider trading or they get done for. Again, they need to be get done for something. Essentially, he gets everything right, if you know. I know Jim Cramer's excellent. He's the best counter trader ever. It's obvious that this rate size have been taking us into a bit more dire straight situation. We see now a couple of things break. They've hiked more. Shares of regional banks have tumbled this month, with investors worried about stress in the banking system following the March 10 collapse of California's Silicon Valley Bank. The failure of Signature Bank in New York followed March 12th, the same day as Fed announced the creation of its bank funding program to help banks meet the need of all the depositors. Yeah. Again, the money's somewhere, man. You gotta find that money. I don't know why you're helping them. It's just like, okay, cool. You mess around with people's money, so here, give it back to them. That's what you owe us. Settling down a bit more so we can still also wait on. Serious difficulties at small number of banks have emerged in the past 2 weeks. Fed Joe Powell says during press conference Wednesday, the Fed, working with the Treasury Department and the Federal Deposit Insurance Corp, took decisive action to protect the U.S. economy and strengthen public confidence in our banking system. Meanwhile, recent developments in the bank sector are likely to result in a tighter credit conditions for housing and businesses to weigh on economic activities, hiring, and inflation. Yeah, makes sense. Everything's gonna. It makes sense, but I don't like. It's not a very nice situation to be in for anybody. So we're in this situation where essentially we're just creating a cluster of things, and just a nice little ingredient, a nice little soup of recession. That's pretty much it. Bitcoin coming back down again. It's hitting this, so maybe it's hitting this price to this, so we can maybe see within the range we sort of come back up, and we sort of try for these highs here. Within that, then 10 o'clock comes, we get a nice little spike here, and then we come into a merry way. Essentially, could be a nice little thing that we can expect from it, looking at sort of current sort of trends. Nothing too outlandish, and nothing sort of too major. I went to this yesterday. There we go. Massive sort of climb, as you saw that US look weaker again. It's a pretty iffy long, but yeah, that was it. You were right in terms of saying go long until here. I said just wait for this short, but there was your double top here. I mean, it's sort of retesting here, sort of holding this, so we run the risk of it coming back and trying to look stronger, but hopefully it gets its teeth sort of cracked in and continues back down. Nice little trade to the ranges. And again, want to see it fall below here, try trade back into sort of this territory here, then continue back on. So it's a nice potential drop for it. If it ends up holding this for today, it will probably just break out into this area here, just break out into these highs and just try look a lot. But for that, do that relative, either the euro has to look a lot stronger or the pound has to, I mean, not the pound, the dollar has to look a lot weaker. And I think that both, because it is, if you go and look at the Dixie. Where is Dixie? Why do I not have it? That, again, we got that weaker dollar that we wanted here. Came back in there, that just caused that rise in the Euro USD. Come back into here, should get a bit stronger of a dollar, come at least for meanwhile, as we sort of try and recover from this crap show that we created for ourselves. And from there, we can maybe look for it to break structure and break lower. But generally, if we're actually contrasting it to where we've been, it's not too bad of a sort of a push, considering coming back the dollar was extremely sort of weak here in terms of leading up to the nice little pump that we had here and nice little sort of push that we had here as well. But again, it strengthened as everyone sort of escaped. But generally, going more further down to the stage we're at now, it's not too bad. Yeah, I just missed that area here again. So again, a stronger dollar could lead to this going further down, which is nice. It's what we wanted generally from this. Also could sort of mean that everyone sort of has the confidence sort of push out. So again, we're just looking for this everything just to collapse essentially. Not collapse, but just go continue down. Just taking a sweet time. I think I'm probably sort of done here. I don't like. There's not much more to add. I don't know if I can say anything more that will sort of change anything, unless you guys want some altcoins specific thing that you guys want charted, or anything else that you want charted. Other than that, I probably can leave off here because it's nice and easy pause for us, because we know that where things are going, we know we're probably bullish in the future. But for right now, we're just looking for it to at least retrace back down to top of sort of the larger sort of consolidating range here. Consolidating range all the way to like 24,500. It's gonna take a while, but generally that's what our target area is. And for today, we're looking just for a potential spike high if we're gonna clear out the liquidity here from these shorts that were stacked into these bars here. Then want for it to come down after the fact. If we push on downwards again, this would be our area of support here. So we're trading within the range. So again, it'll just lead to that scenario where we push up high. As long as we have that scenario bearish for a while. In terms of retest, if it comes back down, retests within here, we're probably looking strong. But if it drops back, if it drops further, it takes out these stops here, we're looking for that to continue its trend downwards. Ross. Home sales were no. I mean, Bank of England. Yeah, again, just nothing major. It's you're not getting anything major coming in, so you're probably just waiting and looking at sort of price action. Just seeing this already being short, so chances are price goes high, and they let price on open go high as traders sort of clamor to try and buy the dip, quote unquote. And we see the slow amount of shorts getting sort of eaten here, so we're expecting price to try and liquidate those at higher sort of prices. Then those liquidations will cause breakout buyers to buy on top of these guys here. Then once breakout buyers buy on top of these guys, then we got our sort of nice little soup of breakout buyers and liquidations that are being eaten up. Then we can just clamor this back down. We're looking for a fast pull down, otherwise we're just going to repeat the same thing where we're going for higher ground, so we're going to collect shorts, push up higher, going to collect shorts, push up higher, but as long as we pull away fast, don't let too many people enter in, we look good. Again, same thing happened here where we collect longs, just let these shorts come in, liquidate them a bit, let the shorts come in, liquidate all of them, and push back down. Then people end up coming in here. 10 we go down, good luck. 10 o'clock down here, you can see, I mean, that's when people start shorting, so we know that's when they start getting into shorts. I mean, from here, it's just everyone's just getting a bit haywire here. I don't think too many people enter shorts there relative to what's here. Then they ended up just getting liquidated anyhow because they're like, I missed the train. There you go, pin to that daily imbalance here, so we can see if we can try and push up now. Get that small little push up prior to sort of that 10 o'clock, and get that nice little stop out range to then push it down. Again, it's a small little thing that we're looking for, nothing sort of too big. I mean, considering yesterday was a nice little day here for us, today should be a nice little day. A continued trend. I don't think. The thing with traders, they just like they forget pain too quickly. Like I'm not gonna fail this time. Straight away, I'm not gonna fail this time. That's always their logic. Never gonna fail. Like this time it will be better, essentially. But as you can see, it's just closing in this gap, so we potentially look for it to climb up here. Once it climbs up, we sort into that. If we just end up totally flipping bullish today, our totally flip for bullish day will be here. Stop hunt. I'm at 10 o'clock and we flip bullish for the entire day. But if we don't flip bullish for today, it's just going to look like this. Take out this. Push back down here. Won't exactly look like that, but that's your general shape that you are looking for. It looks yucky. Nothing too much is changing. SPY is not overtly going crazy here. Everything's sort of staying still in relative sort of succession, so that's nice. Nothing sort of too crazy. So I think we can call that a day. Actual day. I'll keep it on Bookmap while it changes. Okay guys, thank you so much for coming. I will hopefully catch you guys next time onto tomorrow's stream. Again, today looks like a quiet day, but look out for those signs for it to go high or low. If you get a double bottom, obviously it's going to look to take out and go high. Just went long, gonna close and reverse at 10. Watch out for those. Watch out for that 10 o'clock spike. If we spike on the low side, but you're trading long for today. If you spike high, you're obviously gonna trade short. Again, 9:30 is usually a sucker's bet to trade, so just wait for that 10 o'clock, and you always end up looking much better at the end of the day. Hope to catch you guys tomorrow, and have a lovely day. Trade safe. Peace.